Everybody, this is Jim at SP500chart.com. It's Sunday early evening, a little bit after 7 o'clock. We're going to take a look at what happened this past week in the S&P 500 chart. But first, I've got to remind you, as always, the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First thing I'm going to do, if you will indulge me, is I'm going to brag. There we go. Yet another target met, even exceeded last Friday. Now, granted, I didn't see the plunge coming from coronavirus. Nobody looking at the chart could have said this is likely to happen. That was a purely news-driven event. And for that reason, I think because it was purely news-driven and not technically driven, I think this market has a potential to go ahead and set new highs. Now let me explain why I think this is true. Think of the markets as being like a sponge. The sponge absorbs water and it gets larger. The market absorbs investment capital and it gets larger. It gets taller, it gets bigger, wider, it goes up. Then profit taking takes place and some of that water is squeezed out of the sponge. But there's plenty of water, so that sponge can keep absorbing water and squeezing a little bit out, absorbing water, squeezing a little bit of it out. What a typical technical top is made of, and I didn't read this anywhere, I've just figured it out over the years. I think a typical technical top is made when the sponge has absorbed all the water. There's no more water for it to absorb. Now you might say, well, there's always cash. Sure, I get that. But what I'm saying is there's this point at which there is no more investment capital that can go into the markets that will overcome that coming out. So at that point, the markets roll over. And why? Again, because of the whole system. The systemic outlook of a market top is there's no more money to go into these markets. They have to go down, and they do go down. Now, you've heard the saying, bull markets climb a wall of worry. So what's a wall of worry? Well, think about the things that have happened over the past 10 years. You had the Deepwater Horizon Gulf oil spill. It was going to decimate a decent chunk of the U.S. economy. You had the Fukushima reactor accident in Japan and the tsunami in Japan. You had multiple threats of European nations reaching insolvency and going bankrupt. You've had, in 2009, you had all the automakers in the U.S. are going to go belly up. Then you had all the banks are failing. And then what else have we had? Well, it's just a big long list of things that never goes away. But the fact of the matter is, when those things happen, yes, it makes the market go down, but it doesn't squeeze that sponge that was completely saturated. So that sponge still has absorbing power. So the markets were able to then take on more capital. This is what we're seeing right here. I think if you look at this right here, we were going up nicely. This was an event. This was not brought on by the market's inability to go up. This was brought on by fear, pure fear. Now, yeah, we were in a rising wedge, granted, so I think that might have primed it a little bit, but, oh, and remember we had our smaller inverted head and shoulders pattern here. We made that target, okay, we made that target right there. So it's not like the chart absolutely failed, but we did not get up to that 38, oh, what was it, 3870? No, 3840. Did not make it up there. We still could. But let me say this first. What I think has happened after this is that the markets finally became aware of the fact that no, this is not the end of the world, that 2.5 million Americans are not going to die. Instead, it's going to be like maybe 2 really bad flu seasons in one. Maybe 140, 150,000 people dead. By the way, did you know that every year it is estimated that 250,000 people lose their lives in the United States due to medical errors? Look it up. Johns Hopkins University did that study. But don't want to talk your ear off about that. So as the markets now appear to be absorbing this news and dealing with it, remember we had this cup and handle back here. There it is. There's the cup. There's the handle. Once we broke out over that, we made the call. Hey, well, look out. I think we're going to get up to about 3170 minimum target. Then we went sideways for about a month or a little bit more, and we formed a consolidation pattern here between these two orange lines. We broke out from that. We measured that target, and what was that? Oh, 3168. And with those two things behind us, it sure seemed likely that we would get up to 3170, and indeed we did. Having closed the week out now at 3194 with a significant 2.6% gain on Friday alone. Additionally, we are over this line. What is this line? Well, I don't know that this can be as trustworthy as it once was, because we spent so much time being deeply underneath it, but that is the neckline to that big inverted head and shoulders pattern that I thought was pointing us up to that 3840 target. We are now back over that line. We are out of that pink, quote, danger zone, though let's be honest, that really doesn't serve the same function that it used to. So with that in mind, I'm getting rid of that. It was kind of nice to see how we were gauging our progress. The other thing I want to point out is that I mentioned that it looked like we could be in a rising wedge between this support line and this resistance line, but obviously on Friday we broke out above that resistance. So that means I'm going to make this line lighter color, because it doesn't look much like a wedge now. It looks more like a rising channel. And it looks like we touched resistance on Friday at the highs of the day. So let's see what happens coming into this week. All I can say is this. If you've been following, these videos over the months since March, it was tough to see the markets do what they were doing, but I think we came fairly close. Maybe not exactly, but I think we came fairly close when we, when we said that we thought we had seen the lows back in that third week of March. And remember, we had a couple of things to base that on, which I will not bore you with now. But I think one of the things for sure is that you can see this, a couple of descending broadening patterns in here. And remember, when we broke out over this line right here, that's when it looked like, hey, this might be a bottom. Then when we broke out over this line right here, when the markets were still hanging out in around the 2600 level, that really sort of clued in the idea that that this was a cup and handle, that this was support, and that we were getting ready to make a nice move upwards. So I hope, well, I hope you came to that conclusion on your own without taking my word for anything. Never take my word for anything, because I've got lots of ideas. Some are good, some are bad, and I, you should always, as I say at the very beginning, always do your own research and your own due diligence. But here we sit, guys, having made those targets, and over a what still could be, maybe not as important as it was, but what still could be a line of some importance. So there you have it. It was a nice week. It was a good week to be a bull. So I hope you enjoyed what we saw take place this week. My gut feeling is, even though the futures are up a bit right now, my gut feeling is by tomorrow morning we will probably be red on the futures, and I'm basing that simply on the fact of this channel right here and having tagged that upper line last Friday. That's my gut feeling. I could be wrong, but if the chart is telling us the truth, I think probably we start the week weekly, with some selling pressure, and then hopefully we find support once again on this line of support, or even on this neckline here. That would be interesting to see how that develops. So for right now, hey, thanks for taking time out of your weekend to watch this. And as is always the case, thanks for your very kind support. Take care.